Well, that was. Geez. Oh, there I am. Hey, look at me. Oh, nope. Now I'm gone. Okay. Well, half the screen is better than no screen at all. So that's a good start. We'll stick with me, okay? And we'll fix the screen issue, hopefully. This is episode 83. Now, today's episode, I'm going to be talking about my predictions. How the heck do I make predictions? I don't have a crystal ball. So I'm going to explain the process and we can analyze your stocks. So the reason I invited you guys here, whether it was from Twitter or my platform or what have you, is you can mention stocks. I can tell you how I would analyze your stocks and we can see what kind of makes sense from there. Now, let's understand. We're working on a new format. First and all, I'm in a good mood always. Why? Because I get to teach you guys rather than, do anything else. So I show you slides, questions. All right, we're going to change it up. So I'm asking you that you're here to learn. So other than giving me a thumbs up, please make a comment. Let me know where you specifically, I don't care, whoever's making the comment, let me know where you lack efficiency so I can tailor my lessons to help you out. Because if you're taking the time to make a comment, that means you're watching. That means you care. So I'd like to return the favor, okay? Now understand, I want to improve your efficiency. The goal of my platform, the goal of my live streams is to make you more efficient and make you the most efficient trader you can be. Now, if you want me to explain my option rules, let me know. If you need to secure best entries, watch Friday's episode because that's what Love and I spoke about. If you want to know how I make predictions, you're in luck because we're going to do that today, okay? So again, mention some stocks. Now, the first lesson today is day trades. You must save your day trades. Those day trades are like gold. So somebody reached out on Twitter to me and said, dude, you give us a pencil. You can't expect me to be an artist. And I'm like, no, but you have to save your day trades. He's like, I get in and I have to hold overnight. So when you guys are securing profit, I'm still holding my positions till the next day and I don't know what to do. So again, your 3-day trades, because that's all they give you, right? 3 and 5 days. If you do 4, you're suspended or something, or you're warned. Save your 3-day trades. I spoke to somebody today, a lifetime member, private lesson, right? We spoke and she has $2,200. And I said, keep it on the side, all right? When you enter into a position, you need to use your day trade because you want to secure profit. That's the whole point, okay? So that's that. Let's talk about my positions real quick, and then we'll skip slides today because we're not doing that shit, and then we'll get into the analyzing and the prediction process, okay? So Zoom this morning, I entered on that dip, start off the day with a 58% profit. Could have been looking for more, but I just took it and I ran. I probably should have held a little longer. Square, SQ, morning dip. That shit exploded. It went up like 10, 12%. I got out with 240% profit. I mentioned oil to my lifetime members on Friday, right before the close. The OIH was trading at what? Like something 90, right? It was up 190. I don't know. Whatever. It was up like $8 or $9 this morning. I got out. All right. I took 55% profit. I could have made 100% profit. Now I'm not sure why we're split screens. Okay. I'm in a good mood. So what do we care, right? I'm in a good mood. All right. So let's talk about my plays. All right. FCX. I mentioned this morning, I got out at 39 when it crossed 39. Did I think it was going higher? Sure, I would have been wrong, but that's the point why we secure profit. Caterpillar, all right? I gave the alert. I was in for 212, then 183. My average was $1.99. I sold it for $410 this morning. All right, my contract's 410. Some of my members got 440, 435. The point is we secured profit, and that was most important. All right, I'm still holding some Caterpillar options. Yes, because I'm transparent from 820. Okay. What do I have? I have the $210 calls, which I was in since I averaged down at $505 or $505. They're currently $260 each. Okay, so I'm down 40%. What do we do when we're down 40%? We average down. But here's the thing. I tell you, I must be in or at the money. So instead of buying the 210s, I bought the 207.50s, and that's how I averaged down. Now I alerted, I paid $475, and after I gave the alert, the shit fell off the cliff. It doesn't matter. It's at 375 again. The Dow was heavily beat up today, which I mentioned in my pre-market video, but we're not there yet. Plug. I secured 1%, wasn't happy with it, but it's not a loss. So here's the lesson. If you secure profit, I don't care if it's 1%, 10%, 50, or 100, you enter into a trade. If it's beat up and you had to average down, you want to make sure you get profit. You don't want to get beat up, have to average down again, and be waiting on the market the whole week and have your money tied up. So when you can get out with profit and you plan ahead, like this morning, because futures were green, so we were looking for the spike, we get out. Now I'm currently in 2 or 3 positions. The ones I can remember, I'm going to share. All right, Moderna, because I mentioned I scalped Moderna 4 different times last week. All right, 4 out of 5 days, I scalped it for good profits each day. Today, I got into Moderna when I thought it was dipping this morning. Guess what? It dipped more. Now, the great thing, which I shared on Friday and Love shared, when we enter, I bought 1 contract. It dipped. I bought 2 contracts. It dipped. I bought 2 more. I currently have 7 contracts. Now, instead of being down like 40 or 50%, all right, I'm down 21% because I averaged down. I tested the waters. I bought 1, then I bought another one, then I bought 2 more. All right. So that's how you test the waters. That's how you take small piles into big piles without putting your account in danger. If you do it the wrong way, your account will be in danger. Now, granted, min entry, everybody knows I like min entry. Min entry is when I call the bottom of an options position and I say, okay, I'm paying $4 and somebody else pays $3 that same day. Well, I missed the minimum entry. It was $1 lower. So I'm going to talk about my Moderna calls. My average is $6 on those, $6 per contract. I think I have 7 or 8 contracts. I think I have 8 contracts because I'm in for $4,800. Okay. I am down 21%. They closed at $460. So again, my average is $6. They're closed at $460. The min entry, this is the catcher, was $3.60. So anybody that says, shit, I'm going to beat Matt's alert. Matt's in for $6 or $7 originally, right? It was 7 or it was under 7. It was like $6.85 was my original purchase. Then I bought more at $5 and change. The point is there's a proper way to average down. As something looks like it's falling off a cliff, you do not want to average down. So small piles, meaning securing profit, you repeat it over and over again. So if you only have 3 trades a week, let's go back to the day trades are golden, right? You have 3 trades a week. You have an account of $1,000. All right, maybe $2,000. Here it is. So small account, you have 3 trades. Because if you need to wait until you have your 3 trades available, then wait. You're not going to use them all on the same day anyway. The point is, Monday comes, you don't make any trades, no problem. Tuesday comes, you make a trade, it was profitable, you make $120. That's it, okay? You knew if you needed to average down, you can carry the position over to Wednesday, and you could average down correctly because you have either 1,000 or 2,000 on the side. All right? I don't know. I'm just guessing your account. But again, your first trade was like for $240. You made a 50% profit, $120. Great. You secured profit because you were able to day trade. You do that 3 times in a week. 3 times. That's it. You don't have to be right about anything else. You have to find the most beat up, shitty position when the market gets thrown up on, and then you enter into 1 contract. That's it. You're getting a deal. Someone's selling it to you because the market's going down. So I don't care if it was Square this morning or Zoom. I mentioned that already. I made money on Zoom. I get happy about Zoom. Whatever it is. Or I mentioned I was going to buy Tesla puts this morning. So I mentioned I was going to buy Tesla puts when it hit 725 and it spiked all the way to like 724 and my order didn't get executed. So I canceled it. I canceled my put order. I was only buying 1 contract. I was spending about $1,000. It was like $1,100. I said, if it comes down, I'm going to buy it. It didn't come down, so I canceled it. Then later in the day, Tesla went up to 726, which would have executed my 1 put option. And where did Tesla go down to? 707. So for a day trade, I would have crushed it. I probably would have made over 100%. All right, so this morning, my pre-market video, and then I think we're going to skip slides. I don't know if we're going to do slides. I'll give it like a second. I said 2 things. Futures were bright. So you have 2 options. If you think the market's going to get stronger today, then you're going to hold on to your positions and you better be right. Or option number 2, futures are bright. Plan ahead. We're going to sell and take profit. Now, if anybody didn't sell their Caterpillar options that we were in for $2 and that we sold for over 100% profit, I got 105. Other people got 137% was the max I've seen. Okay. Point is, if you didn't sell that contract for over $4 and you wrote it down the whole day, do you know where it is today? The same contract I paid $2 that I sold for $400 is now down at $140. So if you ride the elevator up and you're like, yeah, I'm up 100%. and you do not plan ahead. You do not sell. And then it starts going down. And you're like, shit, now I'm only at 50%. 100 was so much better. I wish I'll just hold for 100. And then now it's 20%. Now you're saying, should I sell and just take 20% profit? No, I'm going to hold. I'm going to hold. You know what happened at the end of the day? You're down 40% today on that contract. 40%. So up 100%, down 40% if you're holding. That's why planning ahead is so important. So those are the two choices this morning. The market was going to do very well and continue up, or the same shit we see every day, which I made a 2:15 public Twitter broadcast where I said we see the same stuff every day. And the same stuff every day means the market, the futures, they open up higher, they spike a little because you're like, oh, it's going to be a strong day, and the retail traders are buying in, and then the institutions sell off. Now, what have I been saying for days? The Delta variant is spiking. So we'll talk about COVID real quick, and then we can talk about what the plays should have been today, because I realized where I screwed it up. I almost used the F word there. All right. So COVID in Florida, epicenter, 21,000 new cases. That's crazy. If we keep going on this level, not only in Florida, in the country, we will surpass 105 to 110,000 cases by next Saturday. That's a daily case amount. So, I'm smart and I'm good with math. So are the people on Wall Street. So when they're selling Dow stocks and the Dow is getting hit hard, don't think it's over, because they're selling because they have mathematicians and analysts who understand the COVID rate is spiking. Now, I'm only speaking from experience. I'm pretty sure I had COVID last week after I got my Pfizer shot in March. But last week, my entire family was sick. I actually lost about 6 pounds. I mean, it was pretty bad. But I still go on with my daily life. Now, here's another side note, which is terrible for the environment. Side note, 1.6 million, those biodegradable masks, those N95 masks, were dumped in the ocean last year. All right, here's the good news. It only takes 450 million years for them to dissipate. I mean, that's just crazy. All right, so here's the move I should have made. When I came on this morning and I did my video and I said, Dow could be in trouble or something to that extent, and tech is stronger, which we all know, and COVID is spiking, and the market doesn't seem to give a shit, because that's what I said. The market doesn't seem to give a shit, but it did give a shit. So when I sold my Delta stock, which I got in on Friday at $39.84 because I thought it was recovering, and I realized over the weekend, actually I realized on a Friday, and I said I was going to sell it on Monday, but I got $40.50. It spiked almost to $41. Point is, I made 50 cents on that. I made over like 1.4% on Delta stock as it was, spiking. You got to plan it. I want it out. The point is, if you make a decision and you want out of something, get the hell out of there. All right, that's what predictions are there for. We make the predictions so that you guys know what to do. All right, so I did have some slides. I don't think they're working, or I can get one slide. Oh, there's a slide, but you can't see my face. Oh, now you can see my face. Look at this. It keeps getting better. Now you guys know why I'm happy all the time. Shit just works. All right, so this was over the weekend, right? Saudi Arabia is getting involved with Bitcoin mining, all right? I can't tell you more than that because I can only tell you what I read. But here's the thing about the Middle East, right? They're a little ahead of the game. They're very smart there. And I mentioned this in Dubai. Do you know why Dubai has turned into a tourist destination now? And they have a ski slope and a ski lodge, and they have this crazy big mall, and they have all these man-made islands, because Dubai, the United Arab Emirates, is going to run out of oil in I think it was 20 or 30 years. They will completely be depleted. So they need another source of income, which is why they built this metropolis, which is just amazing. I don't know if anybody's been there, but it's beautiful. All right, let's get on to another slide. So people in the Middle East are pretty smart. All right, now this dude, he wrote this. He posted it on my platform. I didn't ask him. He wrote just mega paragraph. I was so happy. So I'm just going to tell you a little bit. He joined Matt's platform before there was a private Twitter. He follows the rules. Secure profit. I mean, these are always the rules. The rules never change, which is how I know the rules work. Now, people object to me and they say, dude, when you even Unusual Whales, right? I tout Unusual Whales service sometimes. Now, he went on over the weekend and he made a tweet about if you're down 20%, you have a stop loss and you sell. I've come on before and I say institutions, when they invest in options, when they're down 50%, they sell. I said, my rules are completely different. I'm a contrarian. I'm here to help you out of your troubled positions. You're in down something. We're not scare selling. We're looking for the best way to turn it around. So that's the best use of my rules, I guess. We're not scare selling. We're looking for the bottom. We're looking for limited risk. All right, let's go on to another slide if we can. I mean, while they're here. All right, I started with 5K. You had no idea what you're doing. He dropped to $1,000. He found me on Twitter. He got back up to 4,800. That's awesome. But then I guess it's down to 34. Yeah, so everybody rides the elevator up and down. Your accounts are like that. But understand, it's risk versus reward, okay? Options are not risky. So if you think options are risky and you're new to trading, you're wrong. We start with one option. You have $100, great. And options at $1.20, you're waiting for your entry at $70 when it's off like 50 cents or like 40%. You get in at $70, you get a little bounce, you sell at $84, that's 20%. It's only $14, but if you have a small account, you take small piles and you make them into bigger piles. All right, let's get another slide up there, please, John. All right, not my position, but again, on my platform, we have general trading discussions, okay? Similar to a Discord, anybody can make a post, all right? This dude was posting about Chevron, and he had Chevron puts, and he secured 20% profit. Well, I know oil was beat up today, so it was a great post because anybody that followed made money. But what did I tell you? Secure profit. We always secure profit. I don't care your positions. Okay. Oh, I was in the UVXY today. I bought puts at 29.82. It went down to 29 flat. I made 24%. Then it spiked up again, 29.82. I bought the same freaking position. I paid a 1 penny more. All right. And then it spiked at the end of the day. I don't care. I already made my 24%. I'm in with the same exact position. Tomorrow, when this goes down, I'm going to look to secure 24% again. UVXY, not CVX, although that will follow oil. Let's get another slide up there, please, John. FCX. So when I mentioned yesterday, I made a posting again to my platform where FCX dipped hard, all right? And I sold this morning at $39, not per share, but I sold my options for a 58% gain, I think it was. Or actually, FCX might have been more. All right, let's get another slide. I want to get into the questions and the predictions. Thanks, Matt. I appreciate it, Steve. All right, so this is the Caterpillar option I was telling you guys about. This is the profit we secured. In at $2, out at $4. Let's go on to another one. Oh, this was the oil industry. So on Friday, right before the market closed, this was trading at $190 and like 33 cents. I went on the Lifetime chat, okay? Not with everybody else because this was very time sensitive. There was only 10 minutes left in the market. I said, don't be surprised when this spikes on Monday at open to 194. What happened today? Yes, oil. This spiked to 194. Where did it go up to? 198. At what point did Matt get out? About 196.5. So I didn't ride it all the way to the top. I could have made over 100% on this trade. Again, Friday, 3:50 p.m. This morning at like 10:20 a.m., I was out. Now, I made 55%, and I was damn happy with it because we're in a tough market. So if you're having struggles, please pay attention. All right, get another slide. And then let's get, okay. MicroStrategy. Oh, this is the best because this had a great day today. Now, MicroStrategy. This is the Fort Knox of Bitcoin, okay? So I'm talking about institutional ownership is 99.76, which is why even on tough days, it's not really going to drop. Now, if institutions are owning this much of MicroStrategy, where do you think it's going? It's going to the moon, baby, just like Bitcoin. And one of these topics this week, since we're only doing 30-minute shows, is I'm going to make it about Bitcoin. I'm going to make it about cryptos, and I'm going to help, educate everybody, and let's see where it's going. Let's get another slide, and let's get into the predictions soon. You know what? Screw this. Well, leave this one, okay? I blacked out my profits. These are my open positions in white on my spreadsheet, but you can see, man, green versus red. I'm trading at 75% with options, 78 with stocks. Let's get out of this. Let's put me back on the screen myself, and then let's get to predictions. Oh, that's not me at all. Oh, we still got to split the screen? Oh, that sucks. Okay, I guess we'll split the screen then. I like splitting this. No, let's not split it that way. All right, so I want to go to questions. Can we go to questions? Or do I need to do that? I appreciate everybody staying with me. We've got someone new doing the background stuff. Okay, here we go. How far down should we let our options drop before averaging down? Thank you for the question. So here's the thing, okay? If you think you're going to be right about the stock, and I'll speak about two stocks that I averaged down on. Moderna was number one. And the second one was Caterpillar, okay? And I'll even use an example like Plug, okay? Because I averaged on a Plug. When I gave the Plug alert, people got out with 40% profit. If you did not get out with 40% profit, and me, I got a little greedy, it went down and it dropped, and I averaged down, okay? Because I believed Plug was going up, and I sold this morning for profit. So as long as you believe your stock is going up eventually in the allotted time slot, then you could average down. So how do we average down? Well, if you're down 40%, we're going to average down, meaning you're in whatever option you're in. It's down 40%. you're going to average down as long as you're not falling on the knife. If it's still going to go down further, you don't want to buy that. I mentioned before, if you're in airlines or cruise ships or casinos, I'm not averaging down on those because you don't know what's the bottom. If the Dow falls even further because COVID cases spike to 110,000 next weekend, and then if they spike to 110, they could easily spike the following weekend, which is 2 weekends out, to about 130,000 cases. 2 weeks from today, we could be at 130,000 cases a day. So if you're in like something Dow related, I wouldn't be averaging down. If you're in a tech related, say you're in Zoom or Roku or Netflix or anything, Alibaba, yes, I would average down on that because I like those charts. All right, let's get another question. I really wanted you guys to bring up some stocks this week, and then we'll make predictions. Here we go, Love. Thank you so much. Oh, this outline is so much better. Look how pretty Love is. Can I say that, or is that sexist? All right, so let me get this open. Let's look at the Roku chart. Now, the great thing about Roku is if you were looking at Roku and it was on your watch list, Roku this morning dropped down to $414 at open. All right. So it dropped pretty substantial at open. If you're ready and it was on your watch list, even at 421 right now, which was as high as 433. Now that had to be earlier in the day. So I believe Roku went from like 430 down to 414, spiked back to 429, ended the day at 421. Makes sense. It's following the market. But when we get to predictions, so what I'm going to do is I'm looking at the 1 month, which I always do to give me kind of the direction of the stock. Now, here's the thing about the 1 month. Volume's been incredibly high with Roku since July 23rd. What does that tell me? I know whether we have COVID spikes, whether there's more restrictions on people, whatever it is, Roku's used, just like Netflix is used. All right, every type of streaming device, I heard somewhere like 80% have to use some type of Roku technology, okay? That's a great thing for the stock. I'm still predicting $500. Now, what I could tell you for the stock is the volume's been crazy. So you probably did before July 23rd, probably 500, 600,000 shares a day. Now it's doing like 4 to 5 million a day. So that's a good sign for the stock. Again, it is tech related. So if the entire market falls off and throws up on itself, then Roku, every stock's going to get hurt. If the market throws up on itself, every stock's going to get hurt. However, I don't think that's happening. There's still so much money on the side that wants to enter. And as some of these stocks, and we'll look at the FANG, right? Facebook, Amazon, Google, Netflix, all the important stocks, they're either holding good. I mean, I'm sure Facebook went down today. What did it go down? Probably like 1%. Again, predictions, okay? So other stocks probably fell off, 6, 7% like that. When I look at Facebook, I know there's demand for it. So then when I talk about making predictions, you have to look at the market, and I'll just simplify for everybody. All right, Facebook off 1.22%. So that's about right. Okay, so predictions. Let's talk about this. Let's clear the screen of the question if we can, John. I don't know if we can do that, but let me talk to you guys about predictions because that's the whole thing here. And then when we get into it, we can actually look at the stocks. I guess we can't do that. So let me just see if I get let me see if I can get a different question on here, something smaller. So howdy is a good question. Okay, so predictions. Here's what we do. There are many different ways to make predictions. Use outside data to make predictions. So let's start in general, okay? What do we know about our country right now? Well, we know the Delta variant, which I'm talking about, is spiking, okay? We know people aren't going out as much, although they would like to. I mean, I saw Lollapalooza had a big festival in Chicago, huge turnout. Obviously, the younger generation isn't as worried as the older generation. All right. That's what the problem is. But still, let's talk about the vaccination rate under 50%. So you make assumptions like still we're under 50%. Yes, vaccinations are up over the past 2 weeks. But if the cases keep spiking, which they will, it's uncertain. It's going to happen. All right. There will be 110,000 next week. And when there's 110,000 next week, the following week, there'll be 143,000. When that is happening, your Delta stock will be back at $35 a share or $34. Your Carnival Cruise Line will probably be under $20. Okay. So you use outside information to make guesses and estimates. Okay. Now, how did I come up with those numbers? Well, I figured about a 10% to 12% retracement is about accurate. Okay. Why that number? Because we've seen Delta move, plus or minus 2 or 3% in any given day. That's their standard range. So if we're thinking there's going to be a COVID responsible for Dow stocks to drop, I'm going to take that original number and I'm going to multiply it by 3 or 4 times. So if I'm looking at 3%, then I say times 3 is 9%, times 4 is 12%. So I'm going to think somewhere between 10 and 12%. So when you look at Delta right now, I think it's what, $39 and change. Let's just say it's $39 and change. Okay. I don't want to make any assumptions. Let's drop 10%. So we'll take out $3.95. We'll take out $4 from $40. We're back at 36. So somewhere between 35 and 36. That would be my call on a good baseline for Delta. Now, if I do the same for Carnival, I believe Carnival's trading between like, it was 22. I should have gotten Carnival puts also. Delta puts, Carnival puts, any airlines. I mentioned Save, which is Spirit Airlines, right? They deny it. But supposedly for months, they've been having issues with their pilots and their handlers. And now at Fort Lauderdale Airport, which is north, there's just like backed up for hours and hours, and they canceling flights. I should have bought puts on that one. All right. So anyway, that's how you make predictions. You make assumptions. You make logical guesses. When you play a play on an option, it's not like, oh, the chart looks good, I hope it goes back up. You do that. You look at the chart. You say, let's see, the stock's going down. Let's see where the volume is. Okay, so your stock's been going on for 3 days or 3 out of 4 days, but the volume is really light. And the last time your stock went up, it had volume 5 or 6 times that. And it's done that a few times. Let's mention a stock so I can give you an example. Sorrentino Therapeutic. Again, I have no current position there, but I'm going to open it up. I'm going to say $8.32. All right. So Essen, always make a prediction. So $8.32, $8.34. Pretty damn accurate. Why? Because I follow the stock, and I knew the stock was up today as high as $8.44, even though there was outflow. So what a great sign for a stock. I'm going to move it to the top of my watch list, actually. SRNE, it had outflow for, let me tell you, 1, 2, 3, 4, 5, 6, 7 out of 8 days. So I know we're just making predictions, and I'm showing you guys how, but I'm going to give you a prediction on this one right now. This one is going to pop soon. This is a perfect example, and I just have to pull it out of thin air. SRNE, if you look at the 1 month chart, okay, last 7 out of 8 days, outflow, lighter volume. The day or the 3 days prior to that, inflow with the biggest volume on July 21st, and it spiked all the way up to probably like $8.99 that day. So my point is, Sorrentino Therapeutic, it will hit $9 within the next week, and you can snapshot that. In fact, somebody should. So back to the beginning. If you missed the beginning of this, I am changing up the way we do YouTube. I want to make lessons specifically for you on different topics. So today's is how I predict shit, okay? I'm going to do a lesson on crypto so we can explain where direction and what I think is happening to different cryptos, okay? But if you have things that you need help with, you're watching, yes, you're watching right now, give a thumbs up and then go and make a comment and say, Matt, I've got problems with choosing entry point. Matt, I've got problems with securing profit. I'm a greedy bastard. Whatever you want to say, tell me what you need help with, or else I can't curtail and tailor my YouTube streams to you, because they're there for you. They're there for members of my platform. They're there for everybody watching YouTube. I want you guys to learn. So if there are things that you struggle with, here's an example. You buy too many options at first. You have $10,000 in your account. You bought 10 $100 options. So you spent $1,000. That's okay, because Matt says you can only spend 10% of your account on a single position. No, it's not okay. If you have $10,000 and you want to put $1,000 into a position, your first purchase should be like 2 contracts at $100 each. You should be in for 200. If it dips like Moderna did to me today, I bought another 2. When it dipped a little more, I bought another 2. If you jump in with all 10 contracts at first, you're going to be down like 50%. Then when you average down, you're down 30%. Let's say it drops more. Now you're in for 2,000. Let's say you need to average down again. Now you're in for 4,000. Or you got stupid and you doubled down there and you put in for 8,000. That is how you blow up your account. You put too much of your portfolio into one position. Instead of securing profits, you're riding it up and down. When it finally goes down, you're adding. When it goes up, you're not selling. That's the problem. And that's what I see over and over. When it goes up, people are watching. They're like, oh, it's going up. I'm so happy. And I'm always happy. But it's going up, so I'm happy. Oh, my God, my account's up 49% today. Well, me and people on my platform are securing profit. We're putting in the sell order. So what? Our account could have been up 62%. You know what happened at the end of the day when it curled around after this? Everything dropped off the face. So if you didn't sell, which I spoke about earlier, if you didn't sell different options positions, you're struggling. So if you don't understand why we take profit, let this be the lesson. All right, so back to predictions. So you just make educational guesses. What do we know about the market? We know tech is stronger than the Dow. All right. We know the 10-year dropped to, I think, 115 today. Okay. Which just makes it so inexpensive to invest in our markets. All right. We know the federal government is buying reverse repos at a ridiculous clip. They went over $1 trillion last Friday. They're usually like 767 billion, which is still a pretty big number. But when you take the increase, it's 33%. So they're very much supporting the market. So the retail traders will push it up at open. Everybody sells into it and it capitulates. So expect the same thing. In fact, from now on, when I sell one position, if I sell calls on something, I'm just going to buy puts and ride it down. If I say it looks like it's going down, so I'm going to sell my calls, then I'm going to buy puts. When I sold my Delta stock this morning, if I entered into Delta puts, I would have made a killing today. All right, so that's about predictions. Let's get into some of your stocks. We're halfway through or a little more. Make some stocks. All right, Snow. Oh, okay. So first, Snow is my tracker today. I didn't mention it because people think when I tweet out, this is my tracker today, they think I like the stock. But what my tracker is, and I'll explain it real quick. If you have a tracker like Snow, which is mostly institutionals invest in, okay? So if Snow is going up, it's a 4-letter stock, we know the NASDAQ is strong. There's a prediction key right there. If you use a tracker. So Snow is usually good as a tracker. I wouldn't use SQ right now, Square, because it's a fintech company and all fintech companies are strong right now. So you have to make sure your tracker falls within like everything. Like you can't use Tesla because Tesla's been huge demand. They beat earnings and it's huge in demand right now. All right, so let's look at Snow right now. It had to have finished down today, make a prediction, right? Because it was up, and as it was up, it was going down. Oh, wow, it actually finished up 1%. The point was about today, it was up about 1%. And I could have sworn they were selling it off. Oh, wow, they did sell it off in the morning, then they took it up. Okay, so my prediction for Snow, let's look at it. Yeah, I mean, Snow's, I can't make a prediction about tomorrow, but I can tell you, actually, I can make a prediction about Snow tomorrow. What you saw today at 268 up just under 1%, I will tell you tomorrow that Snow will be up more than 1%. I'm not saying it's going up 2%, 2.8, 3, 4, 5. It could. I will give you my guarantee. Okay, you come back to me, Mr. Chris, and I know we're friends. If it does not go up 1%, you can call me out on that. I don't care because I'm going to be correct about that. Why? Because 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 out of the past 12 days, there's been inflow to Snow. Okay. Now the market hasn't been strong 9 out of 12 days. So the point is, Snow's above. It's a leader of the pack. Okay. When institutions are buying tech stocks, they're buying big name, big price tech stocks. Snow, Coin, Google, or Alphabet as it's called. They're definitely loading to Facebook too. So somebody asked me about pins today and I said, zoom out a little. Now here's the thing about pins. When I went on Friday and it got shellacked for like 20% on the YouTube on Friday, I said, probably not right to buy in yet. Now, if you did want to test the waters today, you should have bought one contract, because pins is still selling off. Again, if the NASDAQ recovers, pins will be fine. And the great new thing about pins is Kathy Wood is from ARK is investing in pins. I don't know how many millions of shares she bought. Okay, she sold some Tesla today. She only sells when it spikes. So she's holding on to pins and she will support it. Now, the problem with pins is she's got a time frame nobody can deal with. She's like, okay, it wants to move in 6 months. Good with me. Want to move in 3 months? Good with me. We have options. We're like, what's going to happen tomorrow with pins? All right. So again, pins sold off today. Everything sold off at the end of the day. Snow, I like tomorrow. I'm giving you the green light on that. Let's get another question up there. All right. UVXY. So let's take a look at it. Again, it's going to move with the volatility in the market. So people are scared about the market right now. Let's see where after hours. It should probably be right around where it closed. Okay, 30, it's down 50.5%. Yeah. So again, here's what the two things you can look at. UVXY going. So I'm going to give you the end of week prediction and also the prediction for tomorrow. Okay. Sometimes, okay, 1, 2, 3. Okay. Half the time when UVXY has inflow, which means there's volatility in the market and the market's going down, half of the time it will last 2 days. Okay. The other half of the time, it generally just lasts 1 day. If you look at the last inflow day, which was what, July like 27th, the day after, it was at a lower point than it was the day before. So my point being, without today, it opened at what? $28, let's say, 28 and change. So my prediction for tomorrow, and if it doesn't happen tomorrow, it'll happen on Wednesday. But we're definitely going to be in the $28 range, $28.40 or something like that. So we're at $30.15 now. So even if it spikes tomorrow, and some people think it's going to spike 10% to 33, I'm telling you that if it doesn't spike to 33 tomorrow, you could see 28.40 tomorrow. If you don't see it tomorrow, you could see it on Wednesday. All right. If there is a spike to 33, I'll be buying puts. Will I think it's going back to 28? No, but if it spikes to 33, it'll definitely end the week at 30. So this is planning in advance. This is making predictions. Here's a prediction. UVXY spikes to 33. I buy puts. It goes to 30. Okay. UVX doesn't spike tomorrow. It goes down to 28.40. So always have multiple predictions in your mind. Okay. So let's give an example. When I mentioned Tiger this morning, pre-market, TIGR, it was up 6 or 7%. I said it would likely go down to maybe only up 2 or 3% at market open. And if the NASDAQ is strong, expect Tiger to go up probably 9 or 10%, hit double digits on the upside. I also said if the NASDAQ is weak and sells off today, expect Tiger to go down 4, 5, or 6%. So somebody called me out. They said, how can you take credit for Tiger? I didn't take credit for Tiger. I gave you two options. NASDAQ strong, Tiger goes up 10%. NASDAQ weak, Tiger goes down 4, 5, or 6%. I said NASDAQ strong. I said stronger than the Dow. So you put 2 and 2 together. Basically, I'm saying I thought Tiger was going to go up 10%. All right. Now, when it went up 10%, it was 1756 or whatever it is. If you want, you could sell. You just made your 60% on that option. All right, let's get another question in. So hopefully when it comes to you, okay, yeah, hey, Michelle, how are you? Do I see pins after the sell-off? Will be at $60 soon? All right, you're being very specific with pins. So here's the thing with pins. I will tell you with a prediction, pins, let's get that up first. Okay, the prediction is you'll be back in the mid-60s or even $70 range within 2 months. Okay, so that's the prediction. I need 2 months time to get you there. Why? Because I'm looking at the 3-month chart, and from 3 months ago, we went exactly where we were, 57 all the way up to $80 and back to 57. That's 3 months time, 57 to 80 to 57. 3 months to go up and down. Okay, so you're asking about $60. Yes, it's going to happen. Is it going to happen today? No. Is it going to happen tomorrow? No, because there's been 3 heavy days. Once all the weak hands are out, and again, Kathy Wood will continue to buy pins. Why? Because she can. She has no limit on anything she buys. So yes, the sell-off will be over soon. Let's see what this interesting topic is right here. Somebody bought some call sweeps, $60 call sweeps. They bought 3,000 of them today. Let's just see if they're open. See, this is another thing. When you use news about call sweeps or information, the person bought call sweeps. You see if the position is still open. If it's not open, that means they were in and out. If it is open, now these are 8/13 $60 sweeps. So we'll go to options. We'll go to the date 8/13, which is in 11 days. And then we'll look at the $60 calls. And there are currently 3,000 contracts open. Now, there are no contracts for $59, 0 contracts for $58, 0 for $57 and $56. So that person said, I'm making my bet, and he paid just under $1. So he bet $300,000 that pins is going to go higher than $61 because that would basically be his break-even point. Again, he has till August 13th. So, yeah, that's a decent bet because pins could easily get a bounce and go positive for 3 straight days. The dude could sell his options and make 60%. 60% on 300 grand is not too bad. All right, let's get another question or a stock comment. All right, what's with X? All right, I can tell you right now, U.S. Steel, what happened? They were talking, it's like buy the rumor, sell the news. So we're talking about the infrastructure bill for like a number of days, and they're talking about it on Friday, and they can't pass it, but by Sunday they will. So they have it. Supposedly the Senate's going to pass it. Maybe they did pass it. Then it gets pushed down to the House. Now the House isn't going to vote on it until the Democrats pass their other bill. So it could be sitting on the House floor for a week, for 2 weeks, for 3 weeks. So there's no need to buy X. You know what they did? Profit taking. X went up, what, like 10% over a course of a couple of days. And what do? The institutions are like, all right, the Dow's getting hit today. Materials are getting hit. Let me sell my X. Let me sell my Cleveland Cliff. Let me sell my FCX. Again, I beat them to FCX because once it crossed 39, I was out. Now that FCX, let's see where it is, probably like $37.50. That would make sense. FCX. All right, no, $36.50. Okay, so that's a huge difference. I mean, They sold the crap out of that today. So yeah, I'm assuming they probably did the same with X today. What did it go down? Probably 4.5%. Let's see, U.S. Steel, and it went down 5.32%. That was a major sell-off. I think it's probably oversold. So I put all these companies together: Cleveland Cliffs, SCX, U.S. Steel. So I look at the different percentages. We didn't look at Cleveland Cliff today. So I'll tell you if it's oversold in a second. Cleveland Cliff only went down 4.5%. Okay, so you got 3.5%, 4.5%, and X went down 5.32%. So what happened? It sold off. Nothing goes straight up. Nothing. People aren't going to buy in every single day. Oh, let me buy more tomorrow. It's $22. Let me buy more the next day. It's $23. Oh, it's $24. I'll buy some more. That's not how it happens. It goes from 22 to 25. It sells off. It consolidates. It finds a new floor. It goes a little higher. It consolidates again. That's why taking profit is so important. If you're not taking profit, you're riding the elevator up and down, and that shit sucks. Let me get another question. Oh, let me tell you the outlook for X. Yeah, I mean, it keeps finding new highs. So the infrastructure bill is going to pass. So yeah, man, I like X. I would buy on the drop today, 5.5%. Great. I bought, let's say, 2 contracts. It drops 3% tomorrow. Buy 2 more contracts. It rebounds tomorrow. You hold it because you're in a great entry level. Hey, Matt, take a look at JBT. Okay. JBT. I don't know this one. JBT, is that like a bank corp? I've been studying the chart and I want my opinion. Is it worth the money? I wonder if this is the bank stock. Okay. So what you're seeing today is they had earnings on July 27th. There was extremely light volume. This chart looks great, bro. So extremely light volume. Once they had earnings, came out with earnings, there was a little demand the next day, a lot of demand and volume the following day. Now there's extremely low volume on this. So I'm going to assume that it has a small market cap. Nope, 4.56 billion, just low volume on this one. I wonder why. All right, but the chart looks amazing, bro. You will see some consolidation. So I don't know if your consolidation is going to last 1, 2, 3 days. It's a 3-letter stock, so it most likely will move with the Dow, okay? So if the Dow gets beat up tomorrow, you don't want to enter. If the Dow gets beat up the next day, you don't want to enter. It could be on your watch list. Now, we had Love speak on Friday. She was following MicroStrategy, right? MSTR. She waited 2 months watching it before she made her purchase. 2 months. She was waiting for it to drop 40%. So please, if you like JBT, put it on your watch list. It looks damn good to me. The 3-month looks decent to me. However, I mean, it's going to move with the Dow. So if the Dow is strong, yes, this stock could definitely break out. When I say break out, it can move past 150. If the Dow gets thrown up on 2, 3, 4 more days, you could see this stock lose another 8%. So don't enter yet. Keep it on your watch list. It's on my watch list now. Thanks, Jizzy. All right, let's get another question. Tesla, please. Oh, my God. Tesla is very volatile. So what I can tell you about Tesla now is anytime you enter into a Tesla position, if you're buying calls, you better make sure you call the bottom, right? Because if you buy a call and you're just buying it like, hey, it's 11 a.m. I'm going to buy a call. I want Tesla to go up. The chart looks good. And then it falls hard. Like, let's see where it ended up today, right? Let's say you were chasing this morning and you bought Tesla calls when it was at like $720. You know, your calls are probably down like 60% and you're down multiple $1,000s. So Tesla's demand, 3 straight days, heavy volume each of the 3 days. Okay. Now keep in mind, Tesla is one of the companies that will lead the NASDAQ. All right. It passed 700. And what they're probably going to do is they're probably going to bring it all the way up. It can go as high as $870. All right. I'm not saying it's doing that, and it's not going to spike like that without people selling off. Kathy Wood from ARK, we mentioned her again today. She sold off how many million shares today? I think she sold off like $32 million, I think. All right, let's get another question. So yeah, Tesla, you just have to be cautious. I mean, the chart looks amazing, but if they flip the switch on Tesla and they say tomorrow's a selling day, for instance, on Tesla, they could easily take away like 5%, which would be like, no, 6%, $42. Today it moved 3% higher, which is $22. So that's a hell of a move. All right. What are my thoughts on Under Armour for tomorrow earnings on pre-market? Oh, okay. Well, I hate holding companies through earnings because even if they beat earnings, the market could sell them off. All right. They have to crush earnings for them to do good. They just have to blow it out of the water. If they slightly beat, the market will be like, oh, that was just a whisper. And they sell off the stock. And that's what they're doing. That's what they did with Snap before it rebounded, with Pins right now, with STX. It sold off and then it bounced back. Remember, STX went from $90 to $80, back to $90. Okay, so Under Armour. Chart looks good. They're definitely buying into it. Now I know a lot of these retailers have been doing really well. Like Nike reported, Lulu reported, gone up, right? Where's Nike? Because someone was mentioning buying puts on Nike. Maybe they finally paid off. Let's see. They were 165. I said, no, it's probably going to go higher. And look who was right. The Nike puts, which I didn't buy, I said Nike was still going to go up from 159. It hit 162, 164. It's 168. So, yeah, people are going to be buying Under Armour, assuming it's going to have good earnings tomorrow morning. All right. I stay away from earnings because they're dangerous. Next question about a stock. Let's try and hit some predictions. Okay. Here's one of my thoughts on mRNA. So here's the great thing about this one. I don't really need to look at the chart for this. All right. There is demand for this stock. It will go to $380 or something to that extent, maybe higher. They have earnings coming out, I believe, on August 5th, which is Thursday. I'm undecided whether I'm going to hold my stock through earnings. It really matters how it reacts the next couple of days. If I get a spike one day or tomorrow and I get up to 365 or 363, I think 363 is my point, I'm going to unload my options. Yes, the stock is probably at like 343 now, but it moves significantly. It can move $20 in a day, $18 in a day. Again, you're going up to earnings. So I'm anticipating a spike. Today was a sell-off. Now, if you look at Moderna, here's the great news. So anybody want to look at the 1 month chart of Moderna, mRNA, you pull it up, you hit the 1 month chart. Here it is, okay? So we had inflow for 3 straight days. Then July 20th, we had big outflow. Since then, 3 more inflow days, followed by 2 out, 1 in, out, in, out. Tomorrow should be in. It rotates. We haven't had 2 outflow days other than one time in the last month and longer than that. Since July 1st, okay? Yeah, so a month, okay? So, yeah, I assume tomorrow's going to be an inflow day. When an inflow day, now keep in mind, there was like $24 million worth of this stock sold off early this morning by 2 large positions. Then there were 2 large positions that sold off throughout the day at 2:30 and then again at 3:30. Each time Moderna was looking to recover, somebody sold into them. So hopefully that person unloaded all their shares. But I'm looking for inflow today. 346 we closed at. I would love to see a bounce back rate. Let's see, 17 points to 363. That's where I could see Moderna tomorrow, 363, and I'd probably sell and then wait for it to drop to 348 again and buy. Again, I traded Moderna 4 times last week, all for profit. Every time it dropped 10, 12, 14 points, I bought it. By the end of the day, I already sold it. I didn't have to hold it one night over. Today, I have to hold it over. Let's get another question. All right, yeah. Hit the like button, guys. All right, so hit the like button, but better. I mentioned this earlier. We're changing up the format of YouTube. So I want to specifically tailor YouTube streams to your questions. What's going to help you the best? So other than giving me thumbs up, hitting the like, and subscribing, make a comment. Tell me what you're struggling with. Understand my platform is here to make you more efficient at trading. So if you're having a struggle, and here's the struggle. A lot of people have money on the side and they just want to invest it. Oh, it says I have 20,000 available. Let me buy 10,000 of this. Let me buy 10,000 of that. No. Keep your money on the side. Here's a great thing that Robinhooders can do, okay? Because their money's available instantaneously. So say you're trading a small account with like $200. Boom, you transfer it in, you make your option purchase. Whatever it is, you see something new. You're like, okay, I'll transfer 200 more. The point is, you can send yourself money like 4, 5, 6 times a day as you need it. So as you see a position, that's what I used to do. When I used to grow accounts, I had what was it? It was my, let me tell you the right chart. Oh, Ally Bank. So Ally Bank would let me send in money. And as soon as they got it, like 5 minutes later, I could do whatever trade I wanted. So I would only keep the money I needed in there, and I would try and keep it on the side. But if I used it all, I'd be like, okay, no problem. Let me put in 5,000 into this position. Boom. Got happened in the same day. Then I would see something the next day or something like that. I'd be like, oh, this is a perfect entry point. But if I had the money available, I probably would have spent it. I like to spend my money. My options money is my game money. It's like 1% of my total trading account, but I like to spend it when it's on the side. I've got this FOMO. I want to buy something with it. So I get it. The point is, don't have that FOMO. Follow the rules, trade without emotion, and that's what we do, okay? Let's get to another question or comment. All right. What do I see Amazon doing? Okay, so a lot of these questions are similar because they're all tech related. So I'll answer the Amazon question specifically, but what I'm going to do right now is I'm going to open up the NASDAQ, which was up 8 points today, which showed a bit of rebound at the end of the day and heavy buying at like 3:58 p.m. Okay. Now, again, what do? They buy at 3:58 p.m. Then tomorrow morning, futures are green. The NASDAQ opens up 60 points, 80 points. It spikes to 100 and they sell everything. And then it goes down. What happened this morning? We were 100 points higher. That's exactly what I foresee happening tomorrow. I hope not. But that's why I'm telling you to lock in your profit. We saw it Friday. We now saw it Monday, okay? Don't let it fool you again. Tomorrow, if futures are up and the NASDAQ spikes to plus 120, 140, and you're making profit on your 4-letter stocks, boom, time to secure profit. I mean, that's what we have to do. You in this tough market, unless you're riding puts of a shitty freaking company, if you're riding puts and this company keeps going down 2% every day, you could hold on forever. As long as you're playing with house money, it's up to you when you exit out. But again, everybody chooses their own strategy. So I'm looking at the 1 day. The 1 day looks great for that. I'm looking at the 5 day. The 5 day, we're only off 1% with the NASDAQ. So now I'm looking at the 1 month and the inflow 2, 4, 6, 8, 9 out of 11 days. There's been inflow into the NASDAQ. So as I tell you, the Dow is having outflow and being beaten up because of COVID worries and Delta and this and travel. Tech is not. Tech, when you see it dip like Square or Zoom or PayPal even. I know PayPal came out with earnings and it fell. Those are buy signals. It fell by pins at $57. I'm not saying it's going to turn around tomorrow, but you count on it. 2 months from now, pins will be above $70. Oh, Matt, anybody can predict 2 months from now. Really? You're talking about a $14 move, which is about 28% to the upside. So 28% in the upside in like 2, maybe even 2.5 months, okay? If you can get 28% and you're just trading stock, right? That would be amazing for a year, much less a 2-year gain. But I'm telling you, within 2 to 3 months on pins. Okay, let's get another question, comment. Okay, somebody asked me about Facebook, so I might as well look at Facebook because they asked me on the side today. And let's see what Facebook looks like. Okay, so Facebook gave earnings. Again, there was anticipation of earnings, so there was a buildup from about $353, okay? Actually, they were buying all the way at $341 because Facebook was selling off. So the point is, they bought 5 straight inflow days. They didn't like the earnings report. So technically, Facebook could fall another like 2 or 3%. It could go down to like 342. Now, I don't see that. This is one of the floors that we're on. So it's either going to go down right now or it's good. All right. They're doing crazy construction outside. So we're actually going to call it a day right here. So I appreciate everybody for watching. This is awesome. I appreciate your questions. If you have other stock questions, might have went away. Now let's call it a day. Thanks so much, everybody. Have a good one.